Last year when I actually was here, I was lucky enough to be speaking straight after Dave Flanagan, and he spoke about the Delta Lithium story. And the way I remember that discussion was just how blown away, mind you, it was a bigger audience, was by the simplicity and brilliance of Dave's message for Yinathara. Big and very good. And if imitation is one of the most sincere forms of flattery, let's talk about the Mandilla Gold Project. It's very, very real, and it's very, very profitable. So whilst that's up there, and I just want you guys to really soak this stuff in, I'd just like to thank the Diggers and Dealers team for giving Astral Resources this second opportunity at what is Australia's premier mining conference. When we were here last year, we made 3 commitments. The first one was that we said we were going to put out a scoping study, and we said it was going to be profitable and it was going to have scale. So that study came out. It was 100,000 ounces per annum. It was over 7.5 years, and then treating low grade. We did it using a design price of $2,100 gold price, and we used a revenue assumption of $2,750. Using those assumptions, it had $740 million worth of cash flow and an internal rate of return of 73%. So we did deliver on that commitment. The second commitment we made was in relation to how well our resources would actually convert into a production target. And fundamentally, that's pretty simple. We're estimating our resources in a 2,500 ounce pit shell, and then we're doing the production target work at 2,100. So it was always going to convert well, and thesis specifically, 80% of that converted into a production target. The final commitment was in relation to Feysville, and we said that Feysville had the potential to deliver several 100,000 ounce scale gold deposits. Think Big is already at that scale. We're working on a mineral resource estimate for Camperman, and Camperman should get pretty close to that scale as well. And then with the recent reconnaissance drilling we've done, we've got a Camperman analogue, we've got an extension to the ethereal shear. So whilst we haven't got that commitment yet, we are well on our way to delivering on that third one. Now, when you're actually presenting to an audience, one of the challenges I tend to have is I'm obviously pretty familiar with this story, and I just assume that all of you guys are exceptionally familiar with this story as well. So I'm therefore assuming that you actually went to the School of Mines here in Kalgoorlie, you got married here, you had your kids at the Kalgoorlie Regional Hospital. So this next animation is for those of you that actually aren't as familiar as I am. So this is the Kalgoorlie CBD, Goldfields Art Centre, where we are right here today, the 92 million ounce super pit. And then we're just overlaying our pit shells and the block model. So we're actually approaching the strike extent of the super pit already, and when we convert Iris into the pre-feas, then we'll actually have that mineralised for the entire length. Now we're just going to go 14 k's down the Goldfields Highway, so you can literally still see the township in the background, and that's our Feysville project. And right next door is South Kalgoorlie's 3 million ounce operation. Now we're just going to head down the Goldfields Highway. You've got the Kambalda town site, you've got the 20 million ounce St Ives gold camp, and then you've got our Mandilla project, which is 20 k's from Kambalda and also only 20 kilometres from St Ives. So this is very, very good real estate and a great place to be exploring and developing a gold project. We are an active explorer. We have been drilling just under 40,000 metres per annum for the last 4.5 years in what continues to be a pretty challenging environment for gold junior explorers. Today we've just started a 14,000 metre infill program, and that is designed to just take those inferred resources into indicated to support the declaration of a reserve as part of the pre-feasibility study. So Mandilla and Feysville are cracking gold projects, and they're in a really, really good part of this world in this Kalgoorlie Goldfields district. Corporately, we raised $7 million in April of this year. The share price is up some 50% on that placement price, and our liquidity is also starting to improve. It's up 2.5 times from the 3 months prior to the 3 months post. Institutional representation is 5.8%. Last year, this time, it's now up to 8.2%, and we've had a couple of instos nibbling away at the register for the entire month of July and into August. So that is an important milestone for us, and it is on the improve. We are well enough funded to continue our exploration efforts at both Mandilla and Feysville, and to deliver the pre-feasibility study. this slide, look, it hasn't really changed too much. The board and management team, we've been steady for a while, and the only change we've recently made is we put Mark Connolly onto the board as our non-executive chair. Now talking a bit more about Mandilla, if you were to build a real estate portfolio, whatever expert you went and spoke to would tell you that it always has been and always will be about location, location, location. And I would argue that exact same investment logic applies here with mining and exploration. Location matters. Having 1.4 million ounces in this Kalgoorlie goldfields district matters, and having 1 million ounces in one large single open pit, yeah, well, that matters even more. And that's the Mandilla Gold Project. We have 4 deposits here at the moment, only 3 of which went into the scoping study. And interestingly, if we went from a 2,100 ounce design price to $2,400, all of Iris comes in, so another 102,000 ounces comes in to the study. And 2,400 versus 3,750, it's not as if I'm going out on a limb there doing a design at that price. Now, junior gold evaluations are still relatively low at the moment, and from an EV per ounce basis, it sometimes looks relatively sad when you have a look at that. And whilst we can't control that, what we can control is just control our laser focus on how we grow cost effectively. And that's one of the reasons we switched our focus to Feysville last year, because we want to continue to grow at a cost-effective price. I am very confident that when the resources come out later this quarter, that we will be growing at sub $20 an ounce exploration cost. The last 500,000 ounces we put into Mandilla came in at $17 an ounce, so that's the benchmark that we want to strive to continue to beat. The interesting thing, a lot of people say don't go out and put a study because it actually just puts a box around the size of your business. Because the investor community goes, well, that's the size of your resource, here's your production target, that's it, you're inside that box. So I do want to spend a little bit of time just debunking that with this slide. Now, I'm not a geologist, so I don't want to go into the genesis of how Mandilla as a gold deposit was formed, other than to say we actually don't know with any real certainty. But what is important to recognise is that we have this large granite intrusive. It appears mineralised along that entire western contact, and wherever we have persisted for long enough, we have found substantial resources on that contact. And perhaps the best way to demonstrate that is to just look at some of these numbers. So on the slide, that's all the drilling we've done. Inside the resource shells, the depth of drilling is 151 metres. You take those resource shells out, and now the depth of drilling is only 50 metres, and then if you sort of take that shallow drilling out, you sort of end up with a bit more of a blank canvas. So between EOS, Iris, and Thea, that represents 13% of that granite footprint, which is 730 odd hectares. So there is a lot of upside and a lot of capacity still to go here. And with Thea specifically, last year we were drilling 450 metre deep diamond holes. That was mineralised. The stockwork vein assemblages were continuing at the bottom of hole, well outside the current resource shells. So there is certainly lots of upside remaining at Mandilla. Now moving on to the scoping study, which we put out in September last year, and we are now working on the pre-fees. The reality with that scoping study is that the detailed mine design, scheduling and geotechnical work was already at or approaching a DFS level of accuracy. The mining cost assumptions and the metallurgical test work at or approaching a pre-feasibility level of accuracy. It was the CapEx and OpEx for the processing and the non-process infrastructure which left this study at a scoping study level. So the key takeaway from that is that as we progress this pre-feasibility, our focus is on growing the production target because the guts of the technical work is already at or approaching a pre-feasibility level of work. So if we just look at the high-level numbers, the first 7.5 years, it's 100,000 ounces per annum, it's 1.3 gram per tonne head grade, and the strip ratio is 6.2, and that includes all of the pre-production mining movement. The forecast mining costs that we used in the financial model and in the study was $11.60 per BCM. Now, I've seen some comparable studies in Australia that have come out in the last month or so, and they're using a BCM mining cost of $7 a BCM. So we will go to market to get those contract rates as part of the study, and I don't know where it's going to land, but I'm pretty confident going in knowing that I want between $11.50 and $12 a BCM to demonstrate that we still have a cracking project, rather than relying on a $7 BCM mining cost to keep my project alive. And that really is important. And if we think about this today, on a per tonne basis, the mining cost per ore tonne, $31 a tonne to land it on the ROM. Processing and G&A adds $19, so $50, nice and even. 1.3 grams per tonne, 95.7% recovery, $3,750 gold price. That's $100 per tonne of cash margin. 2.5 million tonnes per annum processing plant, $250 million worth of cash margin every year for those first 7.5 years. That's a significant project. A couple of other points. Internal rate of return, 73%. At 3,750, it's 145% internal rate of return. It's got an exceptionally quick payback, simple bulk scale mining, fantastic metallurgy, and tried and tested processing. Some reinforcement there. The Mandilla Gold Project, very, very real and very, very profitable. So just moving on to Feysville for a moment, I want to provide our reasoning for why we actually went and started to spend our exploration money at Feysville. So last year we said, has the potential, 100,000 ounce style deposits and several of them. And we still stand by that commitment today. But what we're also after is high-grade ore that we can use to displace low-grade feed that we will feed into this process plant every single year. And that's where there's such a significant opportunity. The first 5 years at Mandilla is 12.5 million tonnes of processing. 4.5 million tonnes of that is 0.6 grams per tonne. So we just displace some of that with 1.1 to 1.3 gram per tonne material, and that's an additional 75 to 100,000 ounces that comes out in those first 5 years. As I said, we'll have resources coming out on Think Big, Rogan Josh, and Camperman this quarter. And I'm very, very confident that that will put us well on our way to realising that opportunity for the upcoming pre-feasibility. So to summarise Astral Resources, last year we made 3 commitments to this audience. We've delivered on 2, and we are well on our way to delivering on the 3rd. The scoping study is very, very real, very, very profitable, and done to a very high technical level of detail. It's a conventional gold deposit, from mining all the way through to processing, and it screens very, very well when you compare it to our development peer group. The study used conservative revenue assumptions at $3,750 gold. It's got 145% internal rate of return, $1 billion worth of net present value at an 8% discount rate, and $1.6 billion worth of free cash flow. So Mandilla also presents with significant resource upside. Feysville has the potential to deliver that high-grade feed early in the project mine life, which will drive improved financial metrics. So the pre-feasibility will be bigger and better than scoping. We are an active junior company, and we will continue to explore and advance our projects towards development. And potentially most importantly of all, there is no junior company in our region that has the available or that development opportunity that we do here at Astral Resources. Thank you.